All right. Thanks again, everybody, for coming. I'm really excited to dive into today's topic, and I'm especially thrilled to have a fantastic presenter with us. Ashwin brings a wealth of knowledge and experience in tip calculation and tip payment distribution, ensuring that employers and employees meet the requirements for a direct tip system so that the tips are exempt from CPP and EI. And I know you're going to walk away with some valuable insights. Um, Please feel free to drop any questions in the chat, and we'll also save time at the end for any questions. And if you wanted to put a question in the chat, I'll make note of it and then we can ask it after. So yeah, without further ado, please join me in welcoming Afshin, co-founder of Atlas.
Awesome. Well, thank you so much for the introduction. Really appreciate you and the team working together with us to put this webinar together for the good folks in Manitoba. We've had a chance to make this presentation across Canada through a variety of different associations as well, and particularly interested in working and collaborating with operators in Manitoba as well. Um, as mentioned, my name is After Musavian. I'm the co-founder and CEO of Atlas. Over this presentation, I'd love to share some information briefly about us and then really get into specifics about tip management. Now, tip management is something that really needs to, tip management solutions is something that really needs to consider all the variety of ways that operators operate across the multitudes of businesses. We've really focused on hospitality, and I'll show you what we've built out for operators like from anywhere from coffee shops to restaurants, hotels, golf courses, wineries, and many more types of businesses. Okay, so a little bit about us. We are a hospitality technology company. We're based out of Toronto, Canada, and we're Canadian. We have two products in the market, Atlas Ops and Atlas Tips. We're releasing our payroll solution next month, making it our third product. And the vision is that we'll be building a suite of other tools that will really help bring more automation to the day-to-day of hospitality operators as well as their teams. We work with a variety of different types of businesses. We work, as I mentioned, with coffee shops, whether single location, multi-location, franchises, full service restaurants, Michelin star restaurants, hotels, golf courses, and wineries. Really, where there's tips, we're there to help. And when it comes down to partnerships, we are now proudly partner with all provinces across Canada, really starting off federally with Restaurants Canada and then going province by province. And our partnership with Manitoba is really kicked off this year. One benefit here is that members of the association will receive 10% discount on Atlas pricing. We'll get into all of that details later. Now, when we look at tipping, we really have understood that across any region in the world where there are tips, there are three main challenges. Challenge number one is tip division. This is where often operators have a spreadsheet or some sort of a formula, and it requires inputs, for instance, hours, schedules, who's worked, seniority, and other factors that determine how tips are divided. Managing this on a spreadsheet is challenging because it comes with errors, typos. You hire a new employee, you forget to add them in. You have an old employee, you forget to take them out. Employees have questions about their tip division, and you have to show that spreadsheet to them or really get into the details of it without sharing private information. On the other side, tip distribution has become particularly challenging with a world where there is less and less cash. Back in the day when everything was in cash, you would always have enough cash to be able to distribute the tips. Unfortunately, now operators are resorting to things like, doing bank runs, getting cash deliveries. Some put tips on payroll, which ends up being very expensive, and some are using other systems to help move the money from their bank to the employees. And finally, the area that operators know the least about, and this is part of the reason why we've partnered with all the associations, is the compliance side. And the reason for lack of awareness is not this, lack of effort. There's a lot of effort put in by operators and other associations in educating everyone, but unfortunately, the information's not been readily available and fairly confusing because it does consider federal regulations and provincial regulations. So our goal is to really provide a solution that hits all these three challenges end to end. And my goal for this presentation is for you guys all to walk away finding solutions for each one of these particular challenges. So the best way to really describe these challenges is to go back in time. I want you to go back to a time where the operations you were working with were really only processing cash. In that world, if I came to one of your locations, for instance, let's say the total meal was $100 and I wanted to leave a tip. We'll put aside taxes for a second. In that world, I would add 115 on the table. The server would pick up the bill and they would notice that 100 belongs to the business. So they would put that $100 in the till and the money in the till would go in your bank account. The $15 that was left additionally would end up in a mason jar or a little bucket there, and the employees would be in control of division and distribution of it. In this world, it was very easy to explain what is tips, what is sales, what is revenue, what is a gesture that was left, for the employees themselves. But fast forwarding to today puts us in a completely different scenario. If your businesses are similar to majority of the operators across Canada, likely 90-95% of your transactions are actually taking place on debit cards and credit cards, otherwise known as digital transactions. So in that case, there is a record of the total payments and the total tips in your point of sale system. Then there's a record of it in your payment processor. Then there's a third record of it in your bank because all of these funds get deposited minus the transaction fees inside of your bank account. Now, as a business owner, it's your responsibility to go to your bank, get that tip out, and give it back to the employees. And that's what happens right now. Now, here is where a net new set of challenges come into play that you should really be aware of. And these really start off with the fact that first, you have to be able to prove that these tip amounts were not revenue. And second, the fact that when you're paying it back to the employees, these tips are not wages. Why is that important? Well, there's two forms of pay. You have wages and you have tips. So if I work at a restaurant and I'm an hourly staff or a salaried staff, that's the wages. When you put the wages on payroll, the employer, I mean, even without payroll, but assuming everyone uses payroll, you know that you're responsible for remitting the taxes owed on that income. So as an employer, you're responsible for making sure the federal taxes are taken off, the provincial taxes are taken off. And then additionally, you deduct CPP, EI, WorkSafe, or other taxes that are payroll taxes, and you contribute to them as a business. So a business adds CPP and EI on top of the pay and deducts CPP and EI from the pay. So a collective of roughly about 15.22% is given to the CRA for CPP, which is Canadian Pension Plan, and EI, which is employment insurance. Now, on the other side, tips are a form of income, but they're a different form of income. They are paid by the customer, meaning that in a true sense of tipping, where there is no auto gratuity, and we'll get to auto gratuity in a second, in that world, the customer is the one that's deciding whether they want to leave $5, 15%, 22%. They are the ones that are paying this tip, and this tip is left for the employees. And outside of the province of Quebec in Canada, the CRA regulation is that it is the employee who is responsible for reporting these, not the employer. Now, any income in Canada comes with federal tax and provincial tax. But this particular income, because it's not wages and it doesn't come from the employer, will not and should not have any Canadian pension plan, employment insurance, or other payroll taxes. So in an example, let's say I'm a server who reports my tips every year. If I report every year anyway, then the benefit to me is that let's say I make $35,000 of tips this year, roughly, just under $600 a week. I end up paying the federal tax and provincial tax, but I'll be exempt from CPP and EI. Now let's go and talk about the majority of the industry. We all know majority of the industry are folks that may not be reporting. Now, we're not here to force anyone to report or not. That's not our job at all. But just to share the facts, if I'm a server who's worked in the industry for 10 years, never reported, I get audited for last year. If I can prove that those tips or those earnings were actually tips, I too will benefit from the exemption. for CPP and EI. It's simply a tax categorization. Is it wages? Then there is CPP and EI. If it's not wages and it's tips, then there are no CPP and EI. Now, it's important here to quickly note that, again, this is specifically for everyone outside of Quebec. In Quebec, you do have to put the tips on payroll, which is the only province that requires that. Also, it's important to note that Atlas doesn't do any reporting of tips at all. We do not report to the CRA or anything else like that. We're here just to share the facts and explain that one category ends up costing the business and the employees more taxes. Now, what we wanted to do is we wanted to actually break this down and provide a set of recommendations to operators and to their staff. To do that, we first needed to understand what are the rules and regulations. This is why we brought on board one of the leading taxation lawyers in Canada, who is the advisor to Restaurants Canada, as well as many other associations. This is also the gentleman who advised Andrew Peller, which famously, Andrew Peller is one of the largest wineries in Canada, publicly traded. They have wineries in Ontario and in British Columbia. Roughly about 10 years ago, they had an issue with the CRA where the CRA declared some of their tips as wages and they were forced to pay a penalty. This gentleman represented them just so he can fix that problem going forward and give them a true model where they can clearly justify tips for tips and wages for wages. So with him, we put together a very simple diagram here. Basically, any business in Canada can add tipping. I'm sure you guys have all seen tipping in the wrong places. You may go and change your tires from winter to summer. Now there is a tipping prompt. That's the reality. Unfortunately, any business can add tipping, whether it's justified or not, that's a different story. We like to promote that, tipping should be where tipping belongs, which is in hospitality. So for hospitality businesses, you decide, do you want to have tips or no tips? Everyone says yes to tips. That's how you stay competitive. But I just want to point out here is that if a business in hospitality said, I don't want to do tipping, no employee group can force them to have tipping. But reality is we all know we want to compete with others, so we add tipping as an option. When you say yes to tipping, now you have to decide, do you want to control the tips, have tips be direct tips, or have a mix? Control tips are really defined by the CRA as tips that the business controls in one way or another. And I'll give you a few examples in the next slide of what that really means. But the name clarifies it. You, the business owner or operator or majority shareholder, are somehow influencing and controlling tips. That's how they call control tips. Those tips will be considered wages. And like I said, wages require CPP and EI. So that's what control tips are. Direct tips are when a business says, I would like to have the option for my customers to leave tips for my staff members. I do want to have that. However, I don't want to be in control of them. I don't want to be managing them. These tips will go directly from the customer to the employees. And finally, a mixed model, and we're seeing more and more of this, is an update to the CRA policy because previously it was black and white, either you're this category or this category. Now there's understanding that you can have a mixed pool. Why would you want to have that? Well, we have some businesses who make the business decision to charge auto gratuity for private events, for large tables, or other rules that really initiate this auto gratuity. Auto gratuity is not seen as tips. It's different. Why? Because the business puts in a policy that, for instance, tables of 10 pay 18%. That is a service that you're now selling. It's not a volunteer amount that the customer leaves. The customer is forced to leave that amount. If the customer is forced to leave that amount, then it is a form of service. And if you've sold that service, number one, you should be charging sales tax on it. And number two, that amount needs to go on payroll. So for operations who have private events that charge auto gratuity or large tables that charge auto gratuity, as long as that operation is able to clearly separate the auto gratuity generated tips from the rest of the tips, and they have clearly charged sales tax on the auto gratuity sales, and they are putting those auto gratuity amounts on payroll and giving it to employees, they are able to keep an auto gratuity pile as well as a direct tips pile. All right, I'll move on to the next slide. Now here we wanted to really break down the difference between direct and control. I want you to understand that These are all defined in a page and a half on the CRA's website. But this is the test that the CRA auditor would put you or your employees through to understand if your tip model should be considered controlled or direct. There are 5 key points here that you need to get check marks for in order to fall into the direct tip category. Number one, are the tips left voluntarily? This is exactly what I was alluding to before. So if you have a policy where large tables pay auto gratuity or private events pay auto gratuity, you do need to clarify. If you don't, you don't. So simpler model is you don't have it. The answer is no, we do not have any auto gratuity. We don't have any menus that mention that tables of X have to pay gratuity of Y. We don't mention it in our reservation system, and our employees know not to ask for it. That's the simple one. If you have the mix, you just need to explain, yes, we do have some auto gratuity, but those auto gratuities have sales tax charged on them and they go on payroll. So that's the first check mark. The second one is who made the final decision on the division model for the tips? Naturally, we work with thousands of employees, hundreds of locations across Canada. Every single time, the business owners or operators made the original suggestions for how the tips should be divided. X percentage of sales go to back of house and support teams. They divide it based on hours and points, whatever rules they want. In this case, if the business is the one that has enforced this policy, that's when the CRA would say the tips are controlled. But if the business is the one that recommended this policy and then had the employees sign off on this, then it would be considered direct. Really, the whole point here is the business owners and operators have a different viewpoint for the business. They understand everyone contributes to the tips, from the host in the front to the dishwasher in the back and everybody in between creates for that unique experience that leads to the customer leaving 18%, 20% tip. Now, tips should be divided amongst the staff. You can recommend how they should be divided based on the vast amount of experience you have. But ultimately, what you want to do is clearly show that that decision was finalized by employees. To do this, what we recommend is forming what we call a tip committee or a gratuity committee. Even locations that we work with over 200 staff members, we recommend a tip committee or a gratuity committee of 3 people or 5 people at max. First of all, you want to have a small group so it's easier to manage. Second of all, you want to have an odd number so that because they do get to vote on a few things, you want to make sure you never have a deadlock. But there is one single rule that you implement with the tip committee, and that is that the tip committee must unanimously agree on the tip division model. And once you have that established, you get to pick your tip committee. So as an example, you pick a server, a kitchen, a chef, for instance, or sous chef or line cook, as well as a manager. These 3 usually end up representing the 3 major departments at any operation. If you have larger teams and you want to represent support, or you want to represent, there's kitchen, but maybe there's also sushi chefs, you can make it more. But again, our advice is 3 to 5 max, and you have representation from each one of the teams. And that's why we put the rule of they need to unanimously agree, so that you never run the risk of a server and a manager getting together and saying, let's kick out the kitchen from the tip pool or anything else like that. In 99% of the cases, when we do this for customers, they actually keep the exact same tip rules that they have. People sign off on it and they move forward, because if it's not broken, why would you fix it? In the 1% that we do change things, it's actually mainly for brand new opens. If all you guys have had an open at some point or another, you know that things are pretty hectic with an open. Things change. What you had thought could happen or could be a little bit different. As a result of that, some of those allocations need to be adjusted. So when we do it for a brand new open, maybe they do a few adjustments to their tip division rules and then they stick with it. When we do existing customers, in almost all cases, they grab the model that they have, they sign off on it, and they move forward. With that signature in hand, you get the second check mark that the business doesn't control how the tips are divided. The third and the fourth go hand in hand. These 2 particularly became important because 3 years ago, in 2022, a restaurant by the name of Restaurant Amano in Halifax ended up having a case with the CRA where they said their tips were audited, and CRA said that their tips are controlled. They fought the CRA and said, look, we have no auto gratuity. We have a tip committee. And the tips from today's lunch and tonight's dinner are paid to the employees the next day via e-transfer. So we should be considered direct. CRA's position was that no, because the business was in control of the tips at the end of lunch and at the end of dinner, and they waited a full day before the tips were paid out. And because the business finance team was the one that processed the payments, those tips should be considered controlled. Unfortunately, they lost that case. They took it to the Federal Court of Appeal and lost again. So now there is this clarity that's been provided by the CRA that they want to make sure businesses are are essentially just not in control of the tips at the end of the shift. So if you have a breakfast, lunch, and dinner, you need to make sure the tips are not in your control at the end of breakfast, lunch, and dinner. Now I want to pause there for a quick second. I want you to know that we recognize this is fairly ridiculous and very, very unrealistic. And I also want you to know that all of our team is actually ex-hospitality people, and I myself owned a restaurant in Toronto and operated it for 5 years. Having seen all of these challenges, this is why we made the system we made to be able to come up with a solution to help you, just like we did for ourselves, protect your business and your team from these 5 inquiries. So 100% the requirement is ridiculous. I'll be the first one to mention it, but that you do need to comply with it if you want to truly fall into the direct tips. We've had customers who weren't doing this and unfortunately got audited. And we have customers now who've gotten a call, and because they have this, they've gotten the green lights and they haven't necessarily got the penalty. Now, you may say you'll have all of this stuff, which is great. You just need the paperwork to prove it. So, for instance, if your payroll ever got audited, your payroll company will provide you with the T4s and the pay stubs, and you show exactly that you've already remitted all the taxes and everything's correct. If your tips got audited, we'll produce the fact that you established a tip committee. The tip committee is in control of the tip division. We have all the agreements in the platform. We have all the signatures from the employees in the platform as well, and we manage the money movement so that you could meet all of these requirements. I'll get into the details of how we do all of this, but this is the simple 5 points checklist that you should keep in mind. And not only you, but as a part of what we do is we actually train your team because they also need to understand this. Because audits happen in two ways. Either the business gets audited or the employee gets audited. And either one gets these 5 questions. Okay, so I want to maybe jump into a little bit about the audit itself and what it really means. And I want to really define 3 questions that often come up. Number one, what is the risk of the audit? How do I calculate it? Number two, a lot of operators say, you know what, this sounds crazy. I'm already paying a payroll company. The payroll company doesn't care if I pay John $100 for hourly payments or $100 for his hourly payments and also $50 for his tips. I'm just going to put everything on payroll. I'm going to show you why that doesn't make sense. And number three, how do we convince the employees? Because ultimately they need to agree. Why should employees believe that direct tips are to their benefits? So firstly, about the business and what the risks are to you. If your tip model is audited and it's determined that your tip model is controlled, you as the business are responsible for the CPP and EI amounts that you had to contribute yourself, as well as the CPP and EI amounts that you were supposed to deduct and hold back from the employees. If you haven't done this, you'll be responsible for both amounts. So in this example, if there was $100 of tips, CPP and EI for the employer would have been roughly about 760, and the CPP and EI for the employee would have been 760. And if you haven't collected these, you'll be responsible for both. Now, this PDF will be shared with all the attendees post-call. Here are these 3 calculators. They actually are available on our website. So if you simply go to atlasrms.com and under more, you take a look at tip calculators. Here, we'll go through 3 examples. So example number 1, I'll use this middle calculator. Let's choose, the story of what happened with Andrew Peller. Why did Andrew Peller have to pay a big penalty? And what was that penalty? So they had, and this is a public case, so we're just sharing public information. So they had roughly about $6 million in sales for the property under question, roughly about 20% in tips. In a given year, they would generate $1.2 million of tips for their employees. Now, what ended up happening is one of the employees was going on mat leave. She contacted the CRA to find out what her insurable earnings are. CRA followed up with those 5 questions. Hey, where do you work? I work at this location. Are the tips voluntary? Yeah, they are. Did you guys decide on how to divide the tips? No, we didn't. The employer did. Okay, we're going to contact the employer. They went and contacted the employer. The employer wasn't able to meet the requirements. It was determined that they are controlled tips. So the CRA said, okay, well, you owe me CPP and EI on this amount. So you could either go and now ask those employees to pay you for the CPP and EI you didn't withheld, or you can just pay for it yourself. Also, how long have you been in business? Since you've been in business for a while, we can go back. They went back 3 years. So the penalty was over $500,000. You can imagine what sort of stress this brought in for them and their team. Even broaching the subject with their staff members of can I get some of the tip money back is an absolute disaster. This happened 10 years ago. They hired 2 external bookkeepers to manage this for them so you could meet the requirements until last year we came along. Now we manage tips for all of Andrew Peller locations across Canada. So fairly expensive penalty. Even if I break it down at $1 million, this is why we advertise, that mismanaging your tips can cost you over 30,000 per every $1 million of sales. Here is $1 million of sales, average tips 20%, that's 200,000. And if you've mismanaged it so that you are considered controlled, you owe $30,000 for CPP and EI due. Okay, let's go to the second example. Putting it on payroll, is that going to be cheaper? Or perhaps some of you who currently have auto gratuities and you are putting it on payroll, maybe you're already meeting that requirement. I want to show you what it's actually costing you. So here's a business, they do 1 million, and all of these are relative ratios, so you could use a calculator to see. They make $1 million in sales, let's say 18% in tips. That's $180,000 in tips. If they put these tips on payroll, they have to contribute CPP 5.95%, EI 1.66%, so a total of 7.58%. That is $13,000 a year. So that's per million. If you have $2 million, that's $27,000. Now, again, this is where we advertise that look like it is a business decision. If you want to have auto gratuities, you can, but it's going to cost you. You have to ask the question of why do we have auto gratuities? In most cases, operators have told us we had these big tables, they didn't tip, servers were upset. We don't want to have unhappy staff, and staff don't want to take on big parties unless they're guaranteed tips. That's why we came up with it. But then when you explain that, well, this being put on payroll is going to cost you and it's going to cost the employee, some operators decide to change it, but some decide to still keep it. Not every operator is the same. It has to be flexible. You should make a decision that's right for you and your team. I think there's a few questions that have come in, so maybe I'll just quickly pause here, take a look here. If that policy lives in your employee handbook and the employee signs off on the handbook, is that enough, or do they need to sign a specific tip out policy form? So really, we have best practices for formulating a tip committee, which I'll be happy to share with another PDF we have put together with that lawyer that I mentioned. You'll notice that when you look up this information about a tip committee, there is no guidance from Ministry of Labor, there is no guidance from the CRA. Because there is zero guidance, and because the CRA says you are responsible to prove which tip model are you in, this is why this lawyer put together these series of recommendations that we've been following. So could your existing employee handbook cover some of these things? Yes, it can. Like, can that be sufficient to cover you? It could be, as long as it covers all of those other little details that are inside of our toolkit, which you'll get, of course, after this call as well. And you could adjust and modify your policies just to make sure you have all that covered. Second question is, if all the tips from card transactions and gratuities are paid to the employees in cash at the end of their shift or put aside in cash to be given to the employee that left work before their shift ended or before the event ended, is that considered direct, controlled, or mixed model? Great question, Andrew. So here, I just want you to consider there are ways for you to, the rule is the business can't be in possession of the tips. So if you're holding on to the tips, if the employee's gone, unfortunately, CRA would still say you're holding on to it. The best way to do this is to designate an individual that's part of that employee committee who can hold on to those tips so that you, the business, aren't holding it, or something that this lawyer was recommending to operators before we came along is a simple model where you buy a second safe. So, as an example, every business has their own safe. They have a business safe, they have the cash in there. Then they buy a second safe. This safe has got a digital PIN code and it's got a deposit slip. And the PIN code is only given to your tip committee. So thereby you've proven that I do not have access to this. Now, you carry enough cash inside of your main safe to make sure that you're able to give the tips owed at the end of that shift, at the end of that shift. So at the end of breakfast, you go downstairs, take a look at your read. As an example, there is $500 of dewbacks. You grab $500 of cash from your safe and you deposit it into the other safe. And ideally, you have a camera recording it. And if that happens, technically, every time you're saying, here's the tips in my possession, it's the end of the shift. Here we go, no longer in my possession. The fact that the tips sit inside that safe and the employees want to divide it up once a day, once a week, bi-weekly, that doesn't matter anymore. You've proven that the tips are no longer in your possession. Of course, you could do this on your own. And that's exactly how, and we'll follow up and give you the instructions. But I want you to keep in mind that, part of the challenges we solve is all the money movement. This process of two safes means that you still have to go and get cash from the bank or get cash deliveries, and every single time you have to have enough cash. If all of a sudden total tips were 500 and you only had $300 of cash, then the tips for that shift will be considered controlled. So there is definitely a way. It requires you to have cash, and if that's something that works for your business, then by all means, you could definitely do that. Okay. Want to go back and cover the last calculator, which is the employees. Again, we know tips make up most of the income for employees. We do need to get their buy-in for this. How do we do this? Well, employees, everyone obviously loves clarity and transparency, but also they love more money in their pocket. So here's how. If I'm an employee that earns $1,000 of tips in a given week, in a given month, I make 4,300 because there's 4.3 weeks on average. If the tips are considered controlled, technically I have to be giving up CPP and EI from those tips. That's $326 a month, or roughly about 4,000 a year. Which one of your employees wants to give up 4 weeks of tips when they can legally be exempt from having to do that? And I want you to know, when I say legally being exempt, it's because that's exactly the case. With thousands of employees on our platform, everyone has a choice that if they want to contribute to CPP, at the end of the year, they just let their accountant know they can contribute to CPP. 0% are doing that. Everyone would rather have more cash in their pocket, and they're getting the exemption to do so. This is why direct tips are not only beneficial to the business, but also very clearly to the employee, because they get a clear exemption. Now, back to over here. Overall, when we're looking at Atlas and what we do is we're providing value because we're helping offset manual work put into spreadsheets for calculations, money movement, getting cash from the bank, or all of these other things. Just think about the times where employees ask, how did I end up getting this 162.55? And you had to open up the spreadsheet, or the time where someone's clock in, clock outs were incorrect. So you had to redo weeks of tips, or number of shifts worth of tips. Or all of these other manual tasks. Even at $25 an hour and 5 hours a week, you're already taking on a cost of $500 a month to do this work manually. Now, the other thing I want to show you guys is a way to actually save on the bottom line immediately, and that's on deducting transaction fees. So I want to go back here to this example, to this calculator right here. So let's go back to this example. $1 million of sales, and let's assume the average tips are 18%. So that's $180,000 of tips. Now, would it be correct to assume that 90% of tips are on credit cards? Right? Okay, I see Rage. Okay, Ray, I'm like, higher, 95? Okay, great. I'm going to use 95. So that means that $950,000 of tips were actually on a credit card. Now, you just paid, the business just generated $171,000 of tips for your employees. So Ray and Mike, since you have your cameras on, I'm gonna bug you guys a little bit. So if a customer comes to one of your locations right now and they leave $100 tip on a Visa and you pay a 2% transaction fees, that means that the customer wanted to leave 100, but they chose a Visa, you received 98. Are you paying 98 to the employees or are you paying 100?
98.
Great. Mike, on your side?
100.
100. Okay. And this is what we see also. So first of all, clarity on policies here. Across Canada, the only provinces that don't allow you to offset the credit card fees are New Brunswick, British Columbia, and Quebec. All other provinces don't have a policy on this, meaning that you can offset it. Because the point is, if the customer left $100 cash on the table, you owe $100 cash to the employees. If the customer left $100 on their debit, you still owe $100 despite the debit has a fee. But for credit cards, you're able to offset it. You should aim to offset the exact amount or slightly below it because you never want to be in a position where you're dipping into the tips. So, as an example, if your average processing is 2.5% and you're taking 2.5%, this means sometimes because of average, sometimes the fees are lower than 2.5. And in those cases, you're dipping into the tip pool. And if that happens, it will be considered controlled tips. So, you should always consider a percentage smaller than that. But for everybody else that's in Mike's position, I want to show you what that really means. Right now on this 950,000 at 2%, you're paying an additional $3,400 a year just to process tips on credit cards. And that's per million. So if I, go and say, hey, this is 1.9, oops, there we go. And there we go. That's $6,000 a year. So this is again where we advertise that we're able to, if you are not doing it already, help you deduct roughly about $3,000 per million. That's at 1.5% essentially, or excuse me, 2% and assuming 15% in tips. That's an additional saving. And finally, while these are cost savings on the cost avoidance side, you can avoid the liability of being caught with a controlled tip model, which of course will have major penalties for you and so on and so forth. So those are the high levels. Now, what I want to get to is a couple of points around what we end up doing at a high level. Few suggestions for how should you deal with a CRA call if it comes in, and then we can answer questions, and I can dive into potentially showing you guys how we manage all of this in an automated way, making sure we have enough time for questions. So quickly, what we do is we provide you with a CRA compliant solution. We help you save on transaction fees if you like. We automate the tip division and distribution, and we remove cash to whatever degree you want. If your operation is one where you say, hey, our servers calculate tips based on, they get to keep their own tips, but they give their tip out based on a percentage of sales. And if there is enough cash sales, they get to take home as much of the tips as they can, no problem. You could still continue doing that. We keep track and we do those calculations for you. If you said, no, I want everyone to turn in everything, even cash sales need to be turned in, and I want to always pay the equivalent in e-transfers or in electronic transfers that we pay, that's also possible. So that's what this bullet means. On the other side, for employees, the benefits are they get 100% of their tips. We do direct deposits into their bank accounts. We do not put it on cards. We don't put it on digital wallets. They don't have to, move their own money in that way. We directly deposit into their bank accounts. Transparent tip reports for every single shift. Instead of you having to prepare those spreadsheets and then hide all the fields to show one server how much they made or why their tip out was that or so on, we generate these reports. They're sent to them automatically. If they work for multiple locations, they simply toggle between to see the tips earned for those locations. Tip models controlled by them. And the best part is both business and the employees are exempt from the CPP and EI. All right, so now on to some advice for CRA calls that may come in. Here's how the audits take place. In 90% of the cases, an employee is the one who initiates an audit. And this is just very innocently, they call to find out more details about, what are the policies for tip management in this province? Or they want to go on a maternity leave, paternity leave, or they have other questions. They innocently call, they ask a few questions. If they contact the ministry. Every ministry has a mandate to follow up with inquiries if the employee asks for it. So if the ministry says, oh, that's interesting, I need to look into this for you, would you like me to inquire? Those are the tricky words. If the employee says yes, you're going to get a call. When you get the call, you're going to be asked about your tip management policy, who manages tips, who's in possession of it, and all these little things. So you should be prepared. If the ministry sees that there are issues, they pull in the CRA. That's one path. The second path is the employees actually gets audited directly by the CRA, who then asks them what they do, where do they work, and then they call you to follow up. The most important things here are that, number one, CRA agents will call your phone. You have every right to let them know that they're talking to the right person or so on, and then say, okay, that sounds great. Can you please send me all of the information about this inquiry in writing? Because I'd like to get my representatives to review it before we share any information with. You do not need to answer any questions on the call. Do not feel intimidated. Sometimes that tactic is used just to grab answers from you, and you don't want to be in a place where you mention things and then they're used against you. So definitely don't answer anything on the calls. Ask for everything to be sent to you in writing. You can then also, when it comes to response time, ask that you will follow up with all your answers in writing so that you can make sure nothing can be misinterpreted over a call. Some of you may be surprised to know that CRA doesn't accept any digital communication. So, one of our clients wanted to contact them and send all the information by email. They weren't able to. You're able to send it through fax. If you have a fax machine, good for you, but likely you don't. So you'll be using regular snail mail to communicate with them. And then finally, you always have the option of getting representation. Of course, you can always find either if you have an existing counsel that you go to, or if there's someone that you've worked with in the past. And if not, we're always happy to recommend or introduce James Rhodes, who's done this. Literally, I think he's the lawyer with the most amount of experience handling this in Canada. So those are our recommendations for CRA inquiries. I want to quickly pause again to read over a couple more questions and see if there's any additional ones before we move into a demo. So I have a question here from Mike. If one of our servers was audited and triggered a review of our tip policy and we were determined to be not controlled, are we permanently labeled not controlled, or will we be reviewed each time a server is audited? Great question. So basically, the audits are done for fiscals of January to December, because HST is going to be paid out for January to December. So really, they're looking at both CPP EI contributions and HST during January to December. So if you got audited for one employee and then they reviewed your policies and everything else looked good, you're good for this year. If another employee gets audited for this year, likely you can reference that same case and you should be fine. But this doesn't mean you're good for next year, because this is a recurring thing. It's just like your payroll. Just because your payroll got audited in 2022 and everything was okay, doesn't give you a green pass for all the future years. Any other questions? I'm being called to work. I have to leave. Thank you. Oh, pleasure, Tony. If there's any questions, please, we're here to let us know. We're here to answer them for sure via email. Okay, so I want to go back to the requirements here and show you guys how Atlas actually meets these requirements. So number one was around volunteer tipping. I've explained this. This is something you can really consider internally. We do manage clients who have both. We do manage clients who've switched everything to direct tips. So that one is simple and more so a decision you need to make. The second one's around the tip division policies and who gets assigned them and the agreements there. Again, we'll provide a toolkit. If you wanted to do this yourself internally, you absolutely can. But if you wanted to work with us, all these are actually built inside of our platform, and I'll show you how they work. And then the trickiest parts are possession and processing. And this is also something that our platform addresses. So let me show you how it all actually comes together. I want to show you a quick diagram here to illustrate how we've set these things up, because there's a lot of technical and legal considerations. So the first thing is, inside of our system, we have three types of users. We have the owner. So this could be ownership, head of operations, or anybody else who's operating the business, as well as anyone, for instance, from the bookkeeping team or so on and so forth. Then we have the committee admins. These are the individuals that you help select the first time around. And then finally, we have the tipped employees. Each one of these users, when they log into Atlas the first time, they sign a simple agreement. The owners simply say that we've decided to go on a direct tipping model. We've selected a tip committee. They're responsible for this. We've selected Atlas as our agent for money movement. The employee committee signed a same agreement saying that they know that they're on direct tips. They are in charge of the tip division policies, and they too select Atlas as their trustee for money movement. And finally, employees, when they sign in, they confirm that they're aware of this and they know if they have any questions about tipping, they must go to the tip committee or contact Atlas. We provide the support included in our packages. So that's how first we take care of the agreements and creating those separation points between the business, the committee admins, and the employees. Now in practice, for the money movement, this is how the infrastructure is set up. Inside of Atlas, every single location is set up separately. So what you get with these agreements in place is you have the business on the left, the employees and the tip committee on the right, and Atlas sitting in between as a trustee to both. The way that we need to manage the money movement is to meet the requirement so that you, the business, are not in possession of the tips at the end of the shift. Well, to do this, what we do is we analyze each location specific sales and tips historically. Together with the customer, we come up with an average tip amount for a given week. So for instance, between a Monday to a Sunday, you have $10,000 of tips. We ask you for, let's say, $12,000 so that there is a bit of a buffer. That $12,000, we have a pre-authorized debit agreement, comes from you into the Atlas system and sits in a float called advanced float designated to your location. And the agreement reads that the business has advanced a total tips in addition to a buffer for the tips being earned this week in advance of them even being earned. So even though no customers showed up yet and no tips have been left, you've already advanced 12,000 to the agent of the employees. After breakfast, for instance, on Monday, we see that $500 of tips are owed to the employees. We move 500 from here to here. Your balance is now 11,500. Their balance is 500. So technically, immediately at the end of the shift, we've reconciled the amount that truly belongs to the employees. Now, let's say right before lunch, you cancel your service with Atlas. Technically, what we owe you is 11,500 because the other 500 belongs to the employees and is going to get deposited to their bank account. Now, of course, if you decide to continue working with us every day, more money from this advanced float goes into reconciled float ready to be paid out to the employees. The fact that it can sit inside the reconciled float for multiple days, a week, or bi-weekly does not matter anymore because as far as the CRA is concerned, the money is no longer in the possession of the business and it's sitting with the agent that the employees have selected, which is Atlas. Then Atlas can do the deposits in their bank account. On a weekly basis, as this float runs out, our system has an algorithm to calculate how much money you should take from you and bring it to us in your own float. At any given point, you as the business have control over this float. You could log in, see the details, make sure that everything is actually correct. And I want to show you something else quickly here as well, which is really about giving you a little bit more clarity and transparency around the funds that are being moved in and out of your account. So just to quickly log in here, I'm going to show you guys the view from an owner or your finance team or so on. And here you'll see that we've essentially set it up quickly over here. Inside the system, if I go to the settings section, the float shows me, the float shows me exactly to the penny how much is in the account. And at any given point, let's say you wanted to pause these automated transfers, you can contact your account manager or you simply log in and click on pause and confirm. Once you do this, everything stops immediately. The account manager calls you the next day to make sure we can, resume. Now, in addition to that, what you have is a full-on transaction history where you can clearly see when Atlas has moved money from your account into your safe and when it's paid employees, who, when, and how much. So all of it is recorded. You can easily export this to balance your books. Now, just going back to the requirements then, volunteer tipping, tip divisions controlled by the employees. Possession is in the hands of the employees, and processing is done by the agents of the employees, and all the paperwork sits inside of Atlas. And that's how we help you meet the requirements. Any questions on this at all? I know that there was a couple questions about pricing, so I want to jump into that as well. But before I do, I want to quickly also give you a demo for what I mentioned about automation. And really, not only the compliance benefit, but really the automation benefit sits within Atlas. And here's how that all works. So here is a location that's been set up. We have two versions of the application. We have integrated and non-integrated. Integrated simply means that they are we've connected to the point of sale system, we've connected to the scheduling system to pull all the data, and you're simply approving it. Non-integrated means you're just simply punching those data into our system. So I'll show you the integrated. In this case, what we would have done is we would have already pulled in the employee information. You could do a CSV upload. We could pull it in from your scheduling or payroll tool. And what we needed to know are the employee's first name, last name, as well as their roles, because you likely have people like Alexander here, who is a hostess, a catering server, a bartender. She may be a hostess on a Monday, a bartender on a Tuesday, Wednesday, and tip models are different. That's why we need to record their multiple roles. Then we set up the shifts so we can account for your regular weekly shifts, weekend shifts, however they switch. And finally, we set up the tip model. This is the tool that helps you replace your spreadsheet. Over here, as you can see, every department has been pulled in already. So I have bartenders, I have executive chef, I have servers, host, kitchen, bussers, food runners. You get the idea. Underneath each department, I define the source of tips, whether it's a single or multiple sources. As an example, the bartenders, because they serve the customers themselves, they earn their own tips from all departments and all sales categories. They also earn 2% of sales from all other departments. We could have said 2% of only bar sales or whatever else if your model is that granular. But again, the tips can be defined as a percentage of sales, as a percentage of tips, doesn't really matter. As long as you could do it in a spreadsheet, we can do it here. Now, here, for all of these, just to simply put it, like you've got percentage of sales defined. All this means is that each one of these departments is now going to have a bucket where a portion of tips are going to go into. Now, per department, we decide how do they divide it. So as an example, the bartenders wanted to do it by hours. The executive chefs, they want to do an even split. The servers keep their own tips after their tip out. The host, even split. Kitchen wanted to do it hours and points. So in my kitchen, I have 18 cooks, 2 sous chefs, 8 dishwashers, and 3 senior cooks. The cooks get 1 times their hours, sous chefs get 1.5 times their hours, dishwashers 0.5, and senior cooks 1.25. But I can go a step farther. Even though all the cooks get 1, I actually want Brenda to get 1.2 because she's been with us for 5 years. Alex just joined yesterday, so he still hasn't finished his training. We're going to put him at 0.5. So you can get granular to the person, the role, or the department. And finally, we can set it up to define should the tips be divided per shift. So as an example, if you have breakfast shift, lunch shift, and dinner shift, the people who work breakfast get the tips for breakfast, lunch, dinner, dinner. Or do you want to merge all of the day? Or do you want to merge the whole week? And then how often do you want to pay it? Maybe servers who can calculate their tips daily get paid daily, but back of house wants to calculate their tips weekly, they get paid weekly. Support wanted to calculate their tips bi-weekly and they get paid bi-weekly. The system can manage it all. And this is really how smooth your day-to-day would be. You simply go in and you process the totals for a given shift. So as an example, I'm going to do Friday 13th dinner here. I confirm the time, I confirm the shift, then I confirm the time. Then the system connects with the POS to pull the data that I need for the tip division for that specific shift. So as an example, net sales, cash, all other sorts of payments and so on. I confirm that's the total I need to be distributing. And that's step 1. How much tips were there? In step 2, now we're going to go ahead and divide it amongst those staff members. This cash out just took me 30 seconds. Now to the division. Because the system's connected to scheduling or your POS where your clock in, clock outs are done, we can simply pull in all the data for that for those shifts. So as an example, again, for that same night, I connect now with the scheduling tool, or if the hours are on the POS, and then we pull in the data and we go department by department, from bartenders to managers and so on. So bartenders, if you remember, two sources of tips: their net sales, total tips, tip out, they're owed this, in addition to tips from another source. In total, they get 276. You could hide it or see the details. Next, you have your manager. Next, you have executive chef. Next, you have your food runner. Then you have your host. Then you have your kitchen. Let's say your kitchen comes in. They do it by hours. You take a look and you realize that Jacob right now is earning $30 because he clocked in at 2:45, clocked out at 12:15. But you remember that, Jacob actually was doing some admin work until 3. So you simply change this to 3 o'clock. And basically, as soon as you move over, his tips got redistributed. In case the numbers for hours are different for tip management than they are for clock in, clock out. But I just confirmed everyone's tips and I'm done. So it took a whole other 60 seconds, in total 90 seconds, to divide and distribute tips. And now you have a full report that shows you, on this day, this person at this time processed the tips. Here are the totals we took out. Here's everybody that worked for that shift, their role, their points, hours, pooled hours, earned tips. Did they take any cash home? And how much Atlas is going to deposit into their bank account. Your employee gets the same exact thing, but they just get their own line. They don't need to see everybody else. And you want to see the full reports now, you simply go to reports. You see the whole picture for all the tips generated based on tip periods. We call it Monday to Sundays. And as an example here, the 2nd to the 8th, there was 62.37. I open it up, I see it per day. I open it up, I see it per shift. I can get a PDF, view the details, export the whole thing as a CSV. So when we talked about Atlas helps you with all the 3 challenges, we help with the division automation, the money movement directly to the bank account of the employees, and the compliance. So now to pricing. Our regular pricing is we charge $750 per location for the initial setup. This initial setup includes things like review of your tip model, translating your spreadsheet into our system, setting up of your tip committee and signing those agreements, training your team so that they're clear about what direct tips are, and connecting your systems if you like. That's a one-time fee that is done per location. From there, on a monthly basis, you pay either $99 a month or $199. The difference is $99, you're manually punching the information in. $199 is when we're integrated and pulling the information directly from your POS and your scheduling tool. That is for the platform, the division, the reporting, the compliance. For the payments itself, you could pay employees bi-weekly. That will cost you $2.50 per employee per month. You could pay them weekly. That's the tips from Monday to Sunday get paid on Fridays. That will cost you $4.50 per employee per month. If you want to do more frequent payments, then you don't pay $250 or $450. You just pay 75 cents per payment. Now, most of our clients start off with once a week. So the tips from Monday to Sunday get paid next Friday. And the beauty of it is, for those that want to provide faster payments, we can allow the individual employees to ask us to pay them faster, and we charge the employee 75 cents directly. So you can cover all the tips once a week. Employee wants their tips, 2 more times a week, 75 cents per payment. We take it off their tips and deposit it into their bank account. All that said, we are doing a collaboration, obviously, with the association here. So regularly, we have 10% off of our pricing. But here, if you do sign up before July 31st, you actually get 30% off of our initial setup fee. If you're a multi-location, we can talk about multi-location pricing. As well, on the subscription fees, instead of 10, you'll get 15% off if you sign up before July 31st. And that's on the monthly fees itself. Okay, so I think we've answered all the questions inside of the chat, and we are 2 minutes over the planned time. I want to know if there's any other questions I can help answer right now. So maybe we'll take a couple minutes there.
Can I ask a quick question?
Yes, Mike, you
Sorry,
go first,
Ray.
and then Ray yourself.
I totally cut you off.
Go ahead.
Um, so the tip committee, and this is just, in the restaurant industry, turnover happens just when we
Of
least
course.
expect it. So we've got three people on the tip committee, let's say, and two of them up and quit just all of a sudden, or one gets fired and one quits. What does that do to the committee? Suddenly we're appointing new people. Maybe they've got different ideas. How does this, how does it all trickle down that way?
So normally what we always recommend is that the business does play a role in selecting the original employees. And if you do need to select because someone does leave for whatever reason, you can get involved. Now, another way to create more separation and make sure it's sort of managed by the team is to allow them to select the representative by voting them in. So if one of your servers left and we need to fill in a new server, the servers discuss internally and say, here's a person that we want to add to the team, and you could add that person in. Now, in our experience, when originally the business selects these individuals, they select their most trusted, the longest tenure employees, because ultimately you're responsible for these things and they can actually do it for you. When that individual leaves, and if the business is deciding, the business goes down the same decision process. But if they wanted the employees to do it, in every case that we've seen, the employees also end up doing the same thing. The employees don't end up choosing someone that knows less about the business or is brand new or doesn't understand how things are. They rather have someone who knows how things are actually taking place. That's how it really happens. And again, you are right, there is a high turnover, but usually turnover ends up being for those individuals that are hired seasonally or others. In most cases, employers have a few handful of people they can rely on for longer periods. Ray, over to you.
Okay. I do have a blended model. I have controlled and direct tips. I have had my eyes open today, so thank you, on what those two categories involve, because I was kind of unclear on direct tips, especially your very detailed example about paying them out at the end of shift as opposed to end of day. Um, and reclaiming expenses for processing. I didn't know that you could actually do that on direct tips. So that is something that, again, very educational. Thank you for that. Do you administer the other part of it, the controlled tips? Like, does Atlas, because I would still be spreadsheeting my controlled tips and then figuring that out, putting it onto payroll. Can it all be done together, or is that something you don't
Yes.
want to mix on your end?
No, we can absolutely do it. Because keep in mind, right, like we work with individuals in Quebec. So for Quebec, you can't actually pay directly. So we do the calculation and then we push it over to them. Export file goes onto ADP or whatever system they have, right? Now, there is a couple ways to look at this. We can do the division for you, so you could, say goodbye to your spreadsheets. If we're just doing the division for you, then there is no utilization fee for that, right? It's only the subscription fee. And if it is a subset of your existing location, there's even a additional discount that's provided because we're not going to treat it as a net new location. It's essentially an event tips for an existing location. So those usually actually even for integrated are priced at $99. So for an extra 99 bucks a month, we can essentially manage all the division, produce the report. You grab that report and put it on payroll.
Okay. Wow. Okay. Thank you.
Great. I hope that was a positive wow, right?
That was a positive wow.
Okay,
That
good.
actually helps because I spend a lot of time with the granular detail in two departments trying to put it all together onto a spreadsheet. And inevitably, it never bounces either. So to
Yeah.
be able to just plug it in here and like your calculations and just the model seems to work so smoothly.
Yeah, no, I appreciate that. For sure, we'd be happy to help. We'll jump into seeing what systems you're using and what your tip division model is and plan it out for you. But so far, we haven't come across a tip model we haven't been able to build out. Most of things are now, we're continuing to evolve it. Most features are now thankfully available. And in some cases, when we need to do, some additional adjustments, that's part of that initial setup fee and some time we take to make sure we can match to your spreadsheet.
Okay.
I want to go back and Miles, I apologize. I kept calling you Mike and I should have had my glasses on. So sorry about that. Did you have a follow-up at all?
No, I think I'm okay right now. You answered most of the questions that I had. T4 was one of the big questions I had. You said you don't do that, but there's obviously reports that the staff get so that they can make their own reporting, right?
That's correct. And in fact, for staff members who do want to report, there is an option inside of Atlas that you could export your total earnings. So if you want to do it, you absolutely can. They're available at your fingertips. But really, it goes on a case by case basis.
Okay. And just to reiterate, someone came in the middle of it. Shift wise, that kind of kitty that you have gets rid of concern. Our shifts end at random times throughout the day, but having that amount with you guys as the middleman is kind of circumnavigates that, right?
That's exactly it. And I want you to even think about like what would a business do before the technology existed for Atlas to do something like this. This is exactly where we got that model from with James, where he had Andrew Peller have two safes, and they had the regular safe and the other safe. And you would just go and put in this money at the end of that shift immediately. The fact that the back of house team has said, you know what, Miles, I want all the tips from Monday to Sunday to be put in a pool with all of our hours from Monday to Sunday, that doesn't matter anymore. As far as you're concerned, you're like, I'm not in control of those tips. I've advanced them already. You guys have decided to divide up your tips in that fashion, so you'll have to wait a week to get it.
Great. Thank you.
Of course. Okay, well, if there isn't any other questions, Kim, I'm not sure if you're seeing anything else on your side, but I believe I've gone through it all. Awesome. Well, if there's anything, I just want to leave you guys with one last resource we put together right after a Restaurants Canada show this year. Now, often what ends up happening is everyone thinks that there are three parties involved in tipping. You got the customer who's leaving the tip, the employee who's the tip is being left for, and the business involved. And unfortunately, a lot of times customers are just not really aware of why is there tipping in the first place. And they put both the business and the employees in these awkward conversations of, oh, why can't the business just pay you more? Or, why do I have to pay the tip? And they start to use all these examples from other places in the world where maybe tipping is not commonplace. So we think it's a fair question, especially because not everyone's worked in hospitality. Not everyone knows what happens behind the scene. We actually put together this site called fairtips.ca. And the purpose of fairtips.ca is to really help educate the customers, the employees, and the employers about their rights and really hit home on this fact that in Canada, in the US, and in other places where tipping is commonplace, it's not because the businesses don't want to pay fair wages. It's economically, it is not possible. In Canada, for instance, what you have is 91% of employees and employers are asking, and this is a survey we did last year, to have more transparency in tipping because the intention of the employer is that all the tips left, they want to give it to the employees. It's just a big burden to do it on spreadsheets and give the level of transparency employees want. On the other side, things that we mentioned here are the fact that in the industry, average profitability was 2.8%. So it's not like ownerships are making 25% and they just don't want to be paying fair wages. They simply cannot afford it economically in Canada because of things like minimum wage, expenses on rent, expenses on food and cars and everything else going up. There is simply no way to get rid of tipping. Now, with that being said, we do want tipping to be merit-based. Employees want that. Customers should be free to put the tip that they want because when they don't put a tip, it's a good indication that service could be improved or something can be looked into. All that being said, this resource is also available for free, something that you can share with your employees. And the next time an employee is caught up in an awkward conversation with a customer, they can simply say, that's a great question. There's a free resource called fairtips.ca. Take a look and you'll get your answers. And with that, I want to thank Kim and everyone at MRFA who helped put this together, Sean and the rest of the team. And do want to thank all of our attendees for today for spending the time to learn a little bit more about Atlas. And hopefully you walked away with some additional insights about direct versus controlled and why it's to the benefit of the business and the employees. If there's any follow-up questions, we're always available. Our contact information is, of course, at the end of that presentation that we were just showing. So you could simply contact us at hello@atlasrms.com, or you go to our website, atlasrms.com, and you could request a demo from there. But again, thanks everyone for spending the time with us, and wishing you guys a great service if you're working today.
Thank you.
Awesome. Thank you so much.
Pleasure. All right, everyone. Have a great day.